Bill Gates is a well-known figure in the business world, with a net worth of over $135 billion as of December 2021. He is one of the world's wealthiest men. He accomplished this by starting his own firm, Microsoft, but he also did it by investing wisely. Now, I'm not sure whether you've been paying attention to Gates' recent investment maneuvers, but what I can say about them is that they're pretty fascinating to say the least. Today, we'll be talking about why Bill Gates is selling all of his holdings in this video. Now, if this is your first time at the Smart Stocks Academy channel, let me welcome you. And to be the first to know when a new video like this is released, hit the like button, subscribe, and click the notification bell next to it. Now, if you're ready, let's get to the video. Bill Gates recently sold and decreased 11 stock investments in his most recent 13F filings, while only buying one. Let's have a look at this, shall we? Subsequently, he sold his whole stake in the company. He did the same thing with Boston Properties, selling 1.1 million shares and reducing it by 100%. Gates sold 100% of his stake in Alibaba, one of China's largest enterprises, in his latest 13F filings. He cut these three stocks by 50% after they went up a little. He liquidated all of his Amazon shares. Jeff Bezos will not be pleased with that. And half of the Bill and Melinda Gates Trust holding was lowered. Even Apple was not exempted to the vengeance of Gates' investing decisions, losing 50% of its value. As a result, Gates is making significant movements. When an investor sells a portion of his holdings, it is usually only a few percent. When it's 5%, people usually say, that's a notable step. That's a massive discount. Bill Gates, on the other hand, is selling all of his interests in Uber and Alibaba, as well as half of his holdings in Amazon, Apple, and Google. And these are significant changes. Some of his minor initiatives, which are nevertheless significant, include the reduction of Liberty Group, the communications corporations, by a quarter. Gates' holdings in Berkshire Hathaway were cut by 10.6%. I'm not certain how Warren thinks about this. Now, if we check all of the stocks he acquired in the last quarter, it was only one, a healthcare stock named Schrödinger, which we will speak about later. I'll say it again, 11 stock sales and only one stock purchase. When I mention stock sales, I don't mean modest sales or minor reductions. I'm talking about a 50% to 100% discounts. And as investors, what we really want to know is why? Why has Bill Gates been able to sell such a large amount of stocks in these massive corporations? Now, Gates and Buffett is similar in the way that they don't want to speak about their own assets too much. We only know about his purchases and sales because he is required by law to do so. But like Buffett, Gates is a value investor who gained his investment talents when he was much younger. And you'll see a pattern with a lot of stocks he sold. They are all quite expensive, which many investors reject. Uber, which is presently trading at $42 per share and has a market capitalization of over $82 billion, is not even profitable. Amazon's pricing has increased by more than 350% in the last 5 years. It has a PE of 66, which is regarded quite high. Apple is up more than 519% with a PE ratio of 32. Google, or Alphabet as it is known informally, is up by 270% with a PE ratio of 28, the same as Apple. So, you'd have to argue that these equities that Bill Gates is fleeing are expensive in his opinion. It's not like he's trying to get rid of them because he needs money. I mean, His personal wealth is over $135 billion, so I'm sure he has enough of cash on hand. But I believe Gates is concerned about a market collapse. If you look at a number of equities on the market, you'll see that their values have soared to absurd heights. I'm sure Bill Gates and his financial manager, Michael Larson, has been watching this market very attentively, and according to the latest news, they've chosen to drastically reduce or abandon some of their assets. It's simply that, as you're all aware, the market has seen a lot of wacky activity. People appear to have plenty of cash on hand, and what are they gonna do with it? Well, they place it on the market. Bill Gates is not a fan of this irrational investment approach. It reminds him of a casino, he said. We don't conceive of the stock market as only acting as a casino, he explained. Gambling operations also have restrictions. So how do you detach social media from stock promotion? Well, to some extent, this serves to remind us of the 1930s. So, with all the irrational behavior witnessed in the market, Gates compares it to the 1930s. Something that Ray Dalio has already mentioned. What occurred then were the Roaring '20s, when everybody was pouring their spare cash into the stock market, since they believed it can only go one way, which was upward. But then, in the late 20s and 1930s, we witnessed one of the world's largest stock market falls. I believe this is a major factor in Gates' decision to reduce his positions. Let's take at the one and only position that Gates is purchasing. Schrödinger is a firm that specializes in drug development and material science. Schrödinger essentially utilizes computer simulation to create various treatments and pharmaceuticals to aid in the healing of ailments. Computer simulation is also used to develop various sorts of materials. Now, I'm no expert in drugs or healthcare. I'm never going to be sitting here or claim to be one, but I will inform you about someone who is well versed in the field of medicine. Bill Gates, to be precise. I mean, he's really been active with the pandemic, vaccinations, and just healthcare in general. And I find it fascinating that Schrödinger is the one stock he actually invested in. It is, after all, a brilliant business idea. These days, computers play such an important role in society. Why not employ them to find new medicines? Perhaps this is the future of healthcare, but I can't say for sure because again, I'm not an expert. What we can conclude is that Bill Gates appreciates the Schrödinger stock. Taking a look at this firm, it's a little one with a market valuation of $2 billion, which is modest in today's world, and they sell for $33 a share right now. Bill Gates would have bought anything around the $70, $80, or $90 figures, and they're doing well financially as well. As they search for new drugs, revenue has been steadily increasing over the last few years. As you can see, earnings are declining, and this is due to the fact that they are reinvesting every dollar in research and development. With Bill Gates' extensive knowledge and research in the healthcare business, this may be a company to consider adding to our own portfolio. However, when we check at his buyers and sellers, we can see that he is selling even more than he's purchasing, 11 to just 1. I would like to direct your attention to something Bill Gates remarked a few years ago. In 2018, he was questioned if another financial catastrophe like that one in 2008 might occur in the near future. Yes, it is difficult to predict when, Gates remarked, but this is a certainty, a succinct and direct response. A lot of people are wondering if it will be in 2022, given the number of stocks he has just sold. Let's look at some figures from the general market in 2021. The first market is the market cap to GDP ratio, which, according to Warren Buffett, is probably the finest single gauge of where valuation is at any given time. If we look at it right now, it is pretty high. It's really 80% more than the market's 0% equal fair value range. And the first thing that really struck me was that it's not only much relatively higher than it was during the financial crisis of 2008, but it is even greater than it was during the 2000 internet bubble. Well, afterwards, we all know what exactly happened to the stocks. This metric indicates that prices are high. The only justification you could have is that GDP has been fluctuating over the past year owing to the epidemic. Moreover, it is possible that it will increase in comparison to last year. Nonetheless, this signal remains a cause for concern. A similar pattern may be found in the market PE ratio. This is very similar to the technological bubble of the 2000s, but nearly not as high as the housing bubble of 2008. Despite this, a market PE ratio of 30 is excessive. If you examine the historical average, it's 15, so it is double of that. Perhaps this is why Bill Gates' current portfolio is so cautious. His top 10 equities, which account for 95% of his total portfolio, are value-oriented safe havens. Even though he sold some, Berkshire Hathaway remains his number one position. Then there's Waste Management, Caterpillar, a conservative one, Canadian National Railway, also conservative, Walmart, Ecolab, Crown Castle, FedEx, and UPS are all conservative businesses. Schrödinger is the last one. So, with the exception of Schrödinger, which is currently his 10th largest holding, it is a relatively secure portfolio. And we don't know how much money he actually has stashed away. And sadly, he doesn't really have to reveal that. However, when it comes to his stock positions, we can conclude that he has an extremely conservative and cautious portfolio for present market conditions. Whenever anyone sells 11 equities and only buys one, especially a wealthy investor like Bill Gates, who understands so much about the marketplace and this new world, I believe he is someone we should focus on soon. And with that, today's video comes to an end. If you haven't already, hit the like button, subscribe, and click the notification bell to show your love and support for this video and to be notified when we upload a new video. Thank you very much for stopping by. Hope you enjoyed it. Hope to see you again.